$200 billion in semiconductor manufacturing here in the U.S. I was reading, Chris, creating roughly 90,000 jobs, direct and indirect. Of course, this is music to the president's ears, right, Chris? This is what Trump says he wants. He wants more domestic chip manufacturing. I'm curious, Chris, what do you make of that Micron headline, that Micron news? What was your response?
Well, I think Micron's been signaling for some time that it's planning to build new facilities in the United States. This actually dates back now a number of years since the passage of the CHIPS Act in the first Trump administration all the way through the Biden years. Micron's been developing plants in a couple of different locations across the U.S. And so I think this new announcement is just a continuation of this trend of chip makers, both from the U.S. and other companies, planning to build more capacity in the United States.
I'm curious, Chris, we have seen these companies making these big splashy announcements, right? How dependent, though, Chris, do we remain right now on sourcing chips from Taiwan, from Korea? And how do you see that evolving, Chris, over the next 5-10 years?
I think for all of these companies making announcements about their plans to invest in the U.S., the big question is, what's the demand going to be? Will there be customers that are looking to buy these chips? And so for all of these countries, not just Micron, but the entire industry, they're going to really carefully calibrate their capital investment based on what demand looks like. And so it's one thing to issue a plan right now, but that could change up or down based on where demand is. Right now, the U.S. is still tremendously reliant on chips imported from other countries, and Taiwan and South Korea being really critical players. That's true for data centers, true for smartphones, true for pretty much any application. And that's because the chip industry is highly globally integrated, with Asian countries as well as Europe playing an important role in the chip industry alongside the U.S.
Chris, I want to switch gears. I want to talk about export controls as well, because we had Trump come out and say, listen, we have this new effort in place, this new framework with China, get those negotiations back on track. It sounded, Chris, like the curbs placed and related to advanced chips, those remain in place. Our Commerce Chief, Howard Lutnick, telling media, it's very clear we are competing with China in the AI race. Howard Lutnick said, we are just not going to give them our best chips. And of course, they want them. What do you make of that, Chris?
Well, I think the Commerce Secretary has been pretty clear that he wants to enforce relatively tough export controls on the sale of AI chips to China. The trade negotiations haven't changed that. And he's been public over the past couple of weeks in also pointing out the real challenges China faces in trying to build up its own domestic chip making capabilities. It's still pretty far behind the U.S. when it comes to capacity of the ability to produce AI chips. And so long as China can't produce enough AI chips at home, it's going to be reliant on whatever chips the U.S. is willing to sell them.
And so are these export controls, Chris, are they effective, ultimately, in your opinion, here at slowing down China's chip sector and slowing down their own domestic chip ambitions?
Well, the controls on the sale of chip-making equipment to China have definitely been effective. That's the reason that companies like Huawei can't produce enough chips for themselves domestically. The controls on the sale of AI accelerators to China have also been a real challenge for China's AI firms. If you listen, for example, to the leadership of DeepSeek, what they've said repeatedly in public is their number one challenge is accessing the quantity of AI chips that they need to train and then to deploy AI systems. And so if your goal is to create problems, cause dilemmas, create delays for Chinese tech companies, the export controls are.
In addition to rewarding early investors, NVIDIA has also compensated those who purchased shares more recently. It has experienced pressure this year, but over the last 3 years, it has increased by more than 740%. That is more than twice as much. Anyone who believes that NVIDIA can duplicate that accomplishment would be wise to purchase the shares now. To be valuable to investors, however, it wouldn't even need to accomplish such a unique achievement. It would probably beat the market and be a very significant addition to practically any portfolio if it doubled in 5 years. Let's check to see whether that is possible. With generative artificial intelligence, AI, becoming the newest big thing, NVIDIA has had an incredible run in recent years. Companies in the tech sector are vying to create the most competitive AI platform or incorporate AI into their user interfaces. AI-generated material, photos, summaries, and more are now available from businesses, and agentic AI is being used to accomplish more tasks with less human involvement. All of these applications have one thing in common. They require strong chips to work their magic. The implementation of generative AI involves two fundamental steps. Large language models, LLM, use training, also known as the input step, to create their knowledge base by sifting through vast amounts of data. The second method is inference, in which the LLMs infer what is being requested or prompted in order to produce the necessary results. Prior to the emergence of generative AI, NVIDIA's robust platform was used to service a variety of sectors, including gaming, which increased revenues. It has been impossible to stop NVIDIA. Sales in the first quarter of fiscal 2026 were 69% higher than the previous year. Including a charge for shipments it was unable to send to China due to U.S. policy, earnings per share, EPS, came to 0.81. NVIDIA's EPS was significantly higher than the previous years, despite the 0.15 per share impact. LLMs are now moving beyond inference to reasoning, a more advanced step of inference that takes a little longer but yields better results, as they grow more reliable and efficient. LLMs that employ reasoning may spend a few seconds to think before responding, as opposed to providing responses right away. NVIDIA keeps creating more potent technology in order to meet the growing demand for strong chips. Blackwell Ultra has replaced the Blackwell model, and NVIDIA intends to introduce Rubin, a new technology, in 2026. According to CEO Jensen Huang, the creation of AI inference tokens has increased tenfold in a single year, and the need for AI computing will only grow as AI agents gain traction. All of this is happening in massive data centers that are powered by these processors for clients, and data centers are being built by major AI-using businesses like Amazon, Microsoft, and Meta platforms. In the first quarter, NVIDIA's data center revenue surpassed total sales by 73% compared to the previous year. NVIDIA leads this market by a significant margin and produces the best and most potent CPUs. It is estimated to hold between 70% and 95% of the market for AI chips, and as the possibility expands, it becomes clear how much NVIDIA may gain from it. NVIDIA's stock isn't very pricey despite its high goals and outstanding performance. It is currently trading at just 25% of the projected earnings for the upcoming year. This allows the stock to rise without becoming unaffordable, which makes it simpler to envision situations in which it doubles your investment. Given that it is selling at 23 times the trailing 12-month sales, it is somewhat pricey from a sales standpoint. For the growth it has reported, that is a premium valuation. Since that ratio is unlikely to increase, you would need to maintain it constant in order to imagine doubling your money. To double over 5 years, NVIDIA would need to post a 15% compound annual growth rate, assuming nothing else changes. Given its present performance and upcoming prospects, that appears to be quite feasible. Additionally, it is likely to achieve growth of more than 15% over the next 5 years, meaning it can double even at a lower price-to-sales ratio, even if it is unable to maintain such a high ratio. All of this indicates that NVIDIA's stock is probably going to quadruple in the next 5 years, and it might possibly do so sooner. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Well, AMD really just threw down the gauntlet against NVIDIA today with its MI400 AI chips, which are set to ship next year. These chips are stacked into massive server rack called Helios. Think hundreds of processors that work as one giant brain. This matters because AI companies need exactly this kind of hyperscale setup to train their large language models. AMD's betting it can also undercut NVIDIA in terms of price as well as power consumption, with executives promising, quote, aggressive pricing, although they didn't share the actual numbers in terms of cost. The company also claims its new hardware beats NVIDIA on offerings for AI inference, which is the part where trained models actually answer questions and generate responses. CEO Lisa Su just spoke with our John Ford just within the last hour or so about the major partners on board. Listen in.
If you look today, 7 out of the top 10, model builders and AI companies are using AMD products. That includes Meta, Oracle, OpenAI. Sam Altman was here with us today. Meta and Oracle were here. XAI, Tesla, to name a few.
This Despite that, though, AMD's share price stock really hasn't gone anywhere in the last year. Down almost 2% versus NVIDIA, up 5% year to date, suggesting investors really aren't convinced so far that this, David, can take on the Goliath of AI chips. But with cloud providers and AI companies burning through billions of dollars on computing power, AMD's timing couldn't be better. The question is whether customers will be willing to risk switching from NVIDIA's proven ecosystem for potential savings from AMD, I should say. Melissa?
Christina, Lisa Su was also talking about an open system yielding the best, innovation. And I guess that's sort of she's talking her book. She wants people to be out of the NVIDIA ecosystem and be willing to use AMD chips and technology.
Right. So it's the 7th generation ROCm. That's her software platform that they also announced the 7th generation. That's an open ecosystem, which differs from CUDA, NVIDIA's closed system. But if you recall, perhaps maybe just, was it a month ago, not even, NVIDIA is finally opening up their closed ecosystem, specifically with a product called NVLink. So without getting too technical, NVIDIA is realizing that the future is open. You need to be able to take different parts from different companies, even though both companies really just want to own the entire stack and have everybody just stuck on their products. But it seems like that's not going to be the future. Chips need to either work together or else you lose market share.
All right. Christina, thank you. Christina Partsinevelos. What do you make of AMD?
Only because you asked me would I rather NVIDIA or AMD, because I know that's what you were thinking, right?
I was not.
I didn't know that.
I wasn't thinking it
Either? No one?
You may answer the question
Dollar?
anyway.
AMD, I would rather have AMD. I think AMD is the wolf on the hill versus NVIDIA is the wolf at the top of the hill. I think NVIDIA has more to lose. AMD has more to
I've
gain.
said that so many times.
You could have, right. So AMD was in a declining trend line since March of 24, convincingly broke out of that declining trend line in May this year. So I would rather, if I'm putting new money to work, I'd rather buy AMD. NVIDIA way ahead, but AMD is poised to be the biggest opportunity for them.
Well, I don't want to take the other side of the birthday boy, but I'm going to anyway. So I'd rather, and the way I'm positioned is far more dollars in NVIDIA than, I was going to say Nova, we were just talking about it, than AMD. I do like Lisa Su a lot, but the valuation differential is not very big, right? So that makes me far more interested in NVIDIA over.
Yeah, well, I mentioned this. So the gross margins in NVIDIA, this has been something we've all been tracking. The company guided them down. And, since they did a couple quarters ago, from the high 70s, kind of the low 70s, they said it's going to pick up back at the end of the year. The stock really stalled out. I mean, it's really gone sideways. And, if you look at AMD and you talk about how they're going to compete with NVIDIA, it's going to be on price. AMD has already this built-in kind of ramp as far as margins are concerned over year. They went to 53% last year, 51.5% expected this year, up to like 55%. If they're going to be competing on price, that's not happening. So the stock, you just mentioned valuation, it's probably too expensive, and that's already embedded in the.
In a report this week, Morgan Stanley described NVIDIA's GTC conference in Paris as another optimistic proof point for the company's operations beyond 2025, noting that while it did not bring any stock-moving news, it did add more evidence of long-term growth. The company emphasized that the primary focus was on industrial physical AI, quantum classical prospects, and European catch-up investment, all of which offer incremental growth on top of the larger AI surge. NVIDIA stressed boosting EU investment at the event. The EU announced a 200 billion AI investment strategy earlier this year, of which 20 billion was set aside to support the construction of 5 AI gigafactories. Plans calling for over 3,000 exaflops of NVIDIA Blackwell compute were announced by NVIDIA itself. These plans included a 14K Blackwell development in the UK and an 18K GB200 Phase 1 deployment with Mistral in France. In addition, the company intends to establish new AI centers in Germany, Sweden, Italy, Spain, the United Kingdom, and Finland, as well as the first industrial AI cloud in the world for European industries. Morgan Stanley noted that NVIDIA's move toward robotics and physical AI was represented in the keynote, and that investment is now taking place. According to the company, GPU sales in Europe might increase by at least 8 times between CY24 and CY26. According to reports, CEO Jensen Huang sounded more upbeat about a schedule for hybrid GPU-QPU systems and reaffirmed NVIDIA's plan to use traditional simulation tools to supplement quantum computing. In an effort to make it simpler for developers to administer, track, and deploy their computing resources globally, NVIDIA has enlarged its DGX Cloud Lepton marketplace by including smaller compute providers like AWS and Azure. Morgan Stanley stated, We would characterize management as highly confident, despite the typically cautious tone of management. They also noted that NVIDIA is significantly outgrowing its ASIC competition. In the semifinals, the company maintained NVIDIA as its top pick and reaffirmed its overweight rating. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now let's dive into today's video.
The close here with 29 minutes left to go in today's session.
Yeah, we are seeing a little bit of a fade since the highs of today's session. And obviously, there's a lot that's going on right now. Currently, we have attacks in Israel here. But going into the close, what you really want to be able to hold is that 59.50 level to the downside here. We have seen some flows there pretty much all day. And that was an area that we kind of identified early on this morning as well. We got fairly close. We got to around 59.60, 59.64 or so. If we can hold here and kind of retrace back, try to get back to the 6,000 level, I think that's going to be a win for the bulls for the most part here. What you do not want to have happen is go below that 59.50 level, getting to the 20-day moving average, which right now is sitting at around 59.44 and some change here. That could be an area for us to really bounce off of, but you don't really want to see a flush, a significant flush going into the weekend. That would not give you a lot of confidence if you're a bull. But obviously, we might see some de-risking going into the close here.
Kevin, I wonder what you're seeing in terms of overall volume for a day like today. Of course, we have been front and center with the news of geopolitics, which has had its own impact on various parts of the market. And I wonder if there's a bit of a reaction on the volume side there as a result of that or anything else you're tracking.
Yeah, what's actually very interesting here for the volume, we're not seeing anything that's completely too outsized here. Even though we are seeing a down session, the volume has been, for the most part, kind of tame. Now, what we are looking at here is the S&P 500 composite up minus down volume here, looking at the difference. And obviously we are in the red right now. So the majority of the volume flows and for these stocks are on the sell side here or the negative side of the down volume. But if you kind of look at this kind of mosaic, it's not that aggressive today. So yes, we have some red on the screen. It is a Friday, but I would not say that this is an outsized day when it comes to volume, which would suggest if we did see a very large volume day that this selling could actually continue. This does not seem to be the case here. We might have some repositioning happening. We do have OPEX next week as well, for, June OPEX, as well as that's a quarterly OPEX. So you have some rotation, some positioning, maybe some risk off sentiment taking place here, but nothing that's too outside of the norm. This is an orderly sell-off, JD. That's basically what I'm trying to say. I wouldn't freak out today. This is an orderly sell-off. If it does continue through Monday or Tuesday and it's still in this type of manner, I think that is, for the most part, orderly. If you actually look at the volatility curve for the VIX, it's still actually in a normalized curve. We're not seeing a backwardation, or we're not seeing a situation where volatility in the near term is elevated compared to what we see in the back half. So this is actually a very normal curve. So overall, once again, maybe a little bit of risk off. This is an orderly sell-off. Let's hold 59.50 into the close. And if we're able to do that, I think that's actually a pretty decent day, given the events that are taking place.
Kevin, if there's going to be a sell-off, thank goodness it is an orderly one. So I do appreciate the context there. You mentioned next Friday, so it's an interesting day here for options expirations, KG, because we have the Juneteenth holiday on Thursday. Markets close. We come in for one day, and we have a reconstitution and options expiration. Very busy day for a lot of the brokers down here and the DMMs at the New York Stock Exchange. What do you look for, and what will you be paying attention to next week, knowing that is a big one in the option space?
Yeah, you're just looking for options, repositioning, rolling out of the June contracts, getting into September's. Those are the larger institutions that are leveraging options in order to collar positions in an underlying portfolio or even to speculate. So you're going to have some readjustments there. You will have also readjustments within the VIX complex, not only VIX options, but also VIX futures. And then the futures contracts on the indexes are also going to expire on Friday morning. So there's going to be a lot happening that does also kind of coincide with very large volume. We can see very big disconnects on that day as well. Usually if we are trending in one direction going into the close, we could see a very violent reversal in the opposite direction. So days where we might see a 1% move to the downside decide to start an OpEx, you may actually see us turn green by the close. So it's a very fun day. Keep it on the calendar here. I'm very excited for it. And given the events that we have right now, we might see some fireworks actually taking place.
You know, that's why I love talking with you, because you say it's a very fun day, and I also agree that's a really fun day. Just unfortunately, most of my friends and family, they tend not to agree when I tell them how fun options expirations Fridays are, but I'm glad you and I can be aligned. You mentioned Vol Complex a short time ago. What else are you seeing there in terms of either VIX action or volatility complex overall, Kevin?
Yeah, so when you're looking at volatility, we actually kind of highlighted this last couple of trading sessions. VVIX, or vol of volatility, was actually moving to the upside. And yesterday we just had a lot of indicators that were moving in the same direction that usually do not. And today we are kind of seeing that follow through, or the readjustment there. If you're looking at vol, it's still relatively elevated, moving to the right. And that will actually boost up premiums, not only for VIX options, but also will translate to the VIX itself. In some respects, as people kind of look at that. But when you're, once again, it's an orderly sell-off. You're not seeing any type of backwardation or a breakdown in positioning right now. I would just say, let's see how everything materializes over the weekend. Sunday night, when we have the futures open, that'll give you a little bit more of a signal as to how the week is going to really play out. But this is not a bad day. Even though you were down 1%, this is actually not a bad day overall. It could be a lot worse, let's say that.
At an event earlier this week, NVIDIA CEO Jensen Huang stated that he thinks artificial intelligence will transform everyone's jobs. While many employment will be created, some will become outdated. Huang stated at the Viva Tech conference in Paris on Wednesday that businesses hire more workers whenever they are more productive, according to Fortune. The CEO of Anthropic, Dario Amodei, stated last month that he believes AI will eliminate half of entry-level office positions, which prompted some of the comments, according to the report. Huang claimed that he didn't agree with nearly all of Amodei's statements. Amid concerns that the quickly evolving technology may result in a large loss of jobs, he wasn't the only tech CEO to speak this week about AI and employment. One of the faces of the AI boom, Sam Altman, CEO of ChatGPT manufacturer OpenAI, stated in a blog post on Wednesday that he anticipates entire job classes may disappear as AI advances. According to Altman, who envisions a time when robots may be able to construct other robots intended for duties in the real world, ChatGPT is already more powerful than any human who has ever lived. Altman did, however, add that people can adapt to nearly anything, and that he anticipates humanity will come up with new ways to deal with the change. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.